Hello fam, welcome to Tiza Karaoke. Please subscribe down below and comment, and God will bless you. Today we are going to study about assets. Assets plus generate revenue. Assets plus generate revenue. We are going to start with the definition of assets. Then we describe different types of assets. Now we are going to start to define what is assets. Assets is anything of value or source of revenue that can be converted into cash, individual, company, and government owning assets. Yes, number 2 definition of assets. Assets might generate revenue, or a company might benefit in some way from owning or using the assets. Number 3 definition of assets. Asset is something containing economic value at the stroke future benefit. Asset is something containing economic value at the stroke future benefits. Yes, number 4 definition of assets. Assets can often generate cash flow into the future, such as piece of machinery, and financial security, or a patent. We have defined asset in 4 ways. Now we are going to study different types of assets. We have 4 different types of assets. We are going to start with the personal assets. Personal assets. We have 4 different types of assets. We have personal assets, we have business assets, we have current assets, and we have fixed assets. We have 4 types of assets. We are going to start with the personal assets. Personal assets. Cash includes cash and cash equivalent, certificate of deposit, checks, checking and saving account, money market account, physical cash, treasury bills, property or land, and any structure that is permanently Yes, that is personal assets. Number 2, we have business assets. For company, assets are things of value that sustain production and growth for business. Assets include machinery, property, raw material, and inventories, as well as intangible such as patents, royalties, and other intellectual properties. Yes, balance sheet lists are company assets that are financed whether through debit or through issuing equity. That is business assets. We have number 3. Number 3, we have current assets. Current assets are assets that can be converted into cash within one fiscal year or one operating cycle. Current assets are used to facilitate day-to-day operational expenses and investments, e.g. cash to cash equivalent, marketable securities, accounting receivables, and inventories. Number 4, we have fixed assets. Fixed assets are non-current assets that company use in production or goods and services that have a life of more than 1 year. Fixed assets are recorded in balance sheet. Example of fixed assets. Long-term assets are referred as tangible assets, meaning they can be physically touched, e.g. vehicle such as company trucks, office furniture, machinery, buildings, land. The key difference within business assets, business assets are non-current assets like fixed assets, cannot converted readily to cash to meet short-term operational expenses or investments. Thank you guys. We have learned about assets. Yes, you have to know what is assets so that if you are investing, you have to generate assets, generate revenue. That is, assets generate revenues. Yes, Assets is something put money on your pocket. Thank you guys. Welcome to my channel. I'm Tiza Kariuki. Please subscribe and comment. Thank you.